What's up, good people? How you doing? Welcome back to the Stock Up with Larry Jones family. You guys are family. And if you're not, take a minute, hit the like, subscribe, and notification bell, and come join the family, all right? We all growing here together. Make sure you don't fall for any spam in the comment section, especially if you see the same AMZ crap. We not falling for that. All right, we smarter than that, good people. Anything I say is not a suggestion for you to buy, hold, or sell. Let's talk about some things that's going on in this market today. Let's first talk about millionaires and what they're doing with their money. But before we do that, this is a Moo Moo Monday. This is Moo Moo Monday. So go ahead. If you want 20 free stock, just go ahead and download or copy my link, my top link below. All right. This is Moo Moo Monday. Deposit $100, you're guaranteed 10 free stock. If you want 20, go and deposit a little more. Let's keep it moving. So what are millionaires doing? Yes, we've been in the market for a year, 2 years, most of you guys. I made my first investment in 92. So I've been through these cycles. I've been through bear markets, bull markets, crashes, recessions, you name it. We've been through it. But what are the millionaires doing, right? And so I want you guys to listen to this and see what the millionaires are doing, and we'll discuss after this.
CNBC out with its new millionaire survey. Participants feeling bearish for 2023. Robert Frank joins us now with the results. Hi, Robert.
Morgan, millionaires now own 89% of all individually held stocks in the U.S. That's why we poll them, and they move markets. Right now, they are bearish. A majority of millionaire investors say stocks will be down double digits next year. That's according to the CNBC Millionaire Survey. 56% expect the S&P to drop 10% or more next year, with a third expecting declines of 15% or more. Last time wealthy investors were this bearish was early 2008 during the financial crisis. Now, when asked about the biggest threat to their wealth, stocks ranked at the top for the first time in over a decade. Few plan to buy stocks next year, and they're holding a lot more cash. About half have more cash in their portfolio than they did last year. There's also an interesting optimism gap between younger and older millionaires. 81% of millennial millionaires expect their assets to be higher at the end of next year, while a majority of baby boomers say their assets will be lower or much lower at the end of 2023. Guys?
How does that compare? Do we have anything to go by in terms of previous polling we've done?
Yeah, so we've been doing this for 8 years, David. And again, this is by far the most bearish we've seen them. And you go back to similar questions and similar surveys all the way back to 2008. They're generally much more optimistic than retail investors and even institutional investors. So this bearishness, given that they own 89% of individually held stocks, is worth noting.
So let's look at some of these major companies, all right, blue chip companies, and then we'll go back and comment on the video that we just watched, right? Look at this. Today is Monday. And this is Walt Disney, Amazon, Netflix, Apple, Microsoft. I mean, these you can't get as blue chip as these. Look at these great companies, okay? Let's look at the week. Look at how much they are down in the last week. Look at that. Walt Disney, 10, almost 11%. Amazon, 11. Netflix, 12. Look at that. Just about all of these major companies are down by major amounts. Let's rotate Microsoft for Tesla and look at that. 14%. It is insane. Let's look at year to date on these companies. All right. There we go. Look at this. Walt Disney down 45%. Amazon 50. Tesla 62. And let's just talk about Tesla for a minute. Elon took a poll to see if he should step down as the Twitter CEO, and overwhelmingly they said yes, please. By the majority, I shouldn't say overwhelmingly, the majority said please step down as the CEO of Twitter because people see it as a distraction. I know there's those of you out there that think that Elon could fly and walk on the moon and all of that. But the truth be told, when you got good CEOs like Bob Iger of Walt Disney, look at what Walt Disney is doing today. You right? You need to be focused on your core consumer, your core product. And Elon, Twitter is he's raising money. He overpaid for it, and he's not focused on Tesla. Do I think Tesla's a great company? Absolutely, Tesla's a great company. I'm going to reinvest in it again. You guys know a while back I lowered my price range that I'm going to be buying to under 150, which we are 149.87 at closing bell, and down to 128. So I'm not going to be buying heavy at 150. And the truth be told, I'm still going to wait until the deep recession, because that's when the reality is going to come. I do believe that Tesla will be around under 128, but that's when I'll start buying heavy. I'm going to monitor the market day by day. I may grab a little at 150, but it'll be very little. And I'm just not going to go in when I see us going down. Now, let's go back to the video we just heard talking about the millionaire. So here's the wrap up without sugarcoating, good people. It's not good for those of you that expect it to be over. But for those of you that are expecting to buy at lower prices, then this is good news. This is good news for me because, as you guys know, I've been remaining and I've been suggesting to all my friends and family, that we cash up. And here's why. We're expected to go into a earnings recession next year. Earnings are expected to be lowered, right? When they started lowering earnings, and in these quarterly earnings, and they started lowering earnings, what happens is, especially in an environment with high interest rates, what happens is the PEs of these companies have to be lowered. Follow? It all works hand in hand. And so what happens is it's going to push the market down, because even at current PEs, the market is too expensive. The entire stock market. And so instead of an average PE of 15, now some of those stocks need to be 12, some need to be 10, and that's what happens in a bear market, especially heading down into a harder recession, which everything shows me that I believe is coming in the first quarter. So let's talk about the millionaires. So let's go back to this video, and I should have talked about this right after so we don't forget. I made a few bullet points that I want to share with you guys. So millionaires own 89% of all individual stock. Just think about that for a minute. Why we do what we do. Why I keep saying, if you want to be rich, do what rich people do. If you want to be poor, do what poor people do. And I say this because of the data like this. So almost 90% of all of the stock that's traded back and forth, 89%, is owned by millionaires, all right? Most of them believe that we will have down numbers, that the overall stock market will be down, and not just down by double digits, okay? At least 10, 20, 30%, all right? 56% of them expect the S&P to drop more than 10%, and a third of them more than 15%, okay? So they're expecting, so just look at the S&P right now, and you do the math. Just take off 10%, and that's where they expect it to fall in 2023. Not 3 years from now, not 5 years from now, a few months from now. Remember, I believe most believe it's coming in the first half, all right? So then most of them have what? Cash. Cash, cash, cash. That's why someone said the other day, left me a comment, cash is trash. No. Cash is king right now because of the sale of 2023 that's coming. So I made another bullet point that I want to, and I think that these guys should see what I saw. They also said younger investors expect their assets to be up in 2023, and older expect theirs to be down. And actually, both, I believe, both are right. All right, so the baby boomers, which are the older ones, they expect theirs to be down, and the millennials expect theirs to be up. Actually, both can be true at the same time, and I believe both are true. Why? Because the baby boomers already have money in the stock market. They've had money in the stock market before the millennials were born, right? And so they have most of their money is in the stock markets. They're in retirement age now. So of course, they don't really pull out because this is their retirement. And so they're not swing trading. This is retirement money for them. So theirs will be lower. But a lot of millennials, expect theirs to be higher. Now, me personally, I expect the first 3 quarters of 2023 to be bad. This continual downfall will be bad. But I truly believe that the stock market will bottom out within the first 3 quarters of 2023. And what is that saying to us? That's where we should have been buying. We should have been purchasing. Okay. I believe by the end of Q4, just like the Santa Claus rally-ish, October-ish, we will start to come out. Now, the entire year after the worst, after the stock market bottoms out, we could trade sideways. We just have to be prepared for that, right? All we need to do is be consistent, right? And that's it. Warren Buffett, remember, we just need to be patient, all right? And so we see how this is all coming together. My question to you is, what are you going to do? Are you going to be in fear or are you going to be in favor? I call this favor because we're going to be able to buy all of these companies lower than where they already are. We're going to be able to buy these companies, good people. That's what we want. We want Walt Disney. We want Amazon. We want Netflix, Apple, and Tesla, and Microsoft. We want these companies, and we want them at a great price. So, are you going to be in fear that the market is coming down, or are you going to be in favor that we're going to get some of these great companies at a good price? All right. So that's what we want to do, good people. Hey, in closing, this is Moo Moo Monday. Let's cash up and get ready. Click the top link and download them both, good people. What I mean by download them both, I have Moo Moo and I have Weeble. Download them both, deposit money, and you can deposit 100 in each and wind up with like 21 free stock, okay? And if you already have your brokers, just cash up and get ready. And then when it comes into our buy range, we're not just loading up right away. We're not dip buying right away. When the deep recession comes, we're going to start dollar cost averaging at a much higher pace than we were all year long. Okay. Hopefully this has shined a light on something, but it's not good. It's not good for the overall market. But for those of us that have been patiently waiting and we have temperament, this is good news because let's face it. Do you rather the market continue to month after month go down, or would you rather just rip the Band-Aid off and get it over? Let's get it over. We cannot go into a bull market until we have the deep recession. Just remember that. All right, good people, live, love, laugh, and learn.